Blaine, and welcome to the Place Your Trades Network. We're the network that focuses on trading daily options using CME Group event contracts to trade E-mini S&P, NASDAQ, Dow, Russell 2000, gold, silver, euro, crude oil, natty gas, and copper. Today we have a great show for you with one of our PYT favorites, horse. Today's broadcast is brought to you by Tradovate, which has built a custom app dedicated to trading CME Group event contracts. This is what we're all using at Place Your Trades. Over the next 2 weeks, we're giving away a trip to Las Vegas. One winner will join the whole PYT team at the Money Show on April 24th through the 26th. All you have to do is go to placeyourtrades.com/Vegas and sign up before March 1st. On March 1st at 4 p.m., we'll have a special show for you, and we'll spin the wheel to see who gets to win the trip to Vegas. Horse, hi. Welcome to the Intermediate Trader. How are you?
I'm doing awesome, Penny. It's fine. I'm finally glad to be able to speak with you. I know we've talked about it for a while, and I'm excited to be able to hang out and chat with you for a bit. So what's up?
I'm thrilled. I feel like I'm in Captain Hook's, private list here, and I'm into it.
I think this one's a little better than the stripper pole background that we had before on some of the Place Your Trade shows, but
debatable. Yeah. I feel, they each have their benefits. But I like. I was
trying to go with something cozier, so we could really get into it and talk trading.
Sure. So what was it like when the crocodile bit your hand off?
Nice. I appreciate good humor. I was actually going for more of like the wizardy look, but the options were limited here. So I just look like a really ridiculous, confused witch, but we're just gonna roll with it.
Okay. All right. Are you a Harry Potter fan?
You know what? I'm not. And I'm ashamed to admit that because I'm a big science fiction nerd, but I never got into the fantasy side of it. So I'm hearing great things about the video game, but I can't bring myself to play it because I didn't watch any of the Harry Potter movies or read the book. So I'd be totally lost.
I like to do a lot of Harry Potter analogies. So
I'm ready for them, though. I think they won't be lost on me.
So I named the show The Intermediate Trader because that's sort of where I am in my career. I'm a COVID trader. I started in June of 2020. And my friend, Alice Dillinger, actually told me that it's very common around the 2-year mark that you can start putting some things together and start building some profitability. And it does feel, I always say that trading was like being locked in a dark room, like no light, and you had no idea where the light switch was, and you had to search. And then I spent 8 months with my hand on the light switch, but I couldn't turn it on. And now I finally feel like, okay, the light's on, I can see things, but it's a different level than a beginner trader. Did you notice that about your own journey?
Yeah, for sure. I think everyone goes through those, we'll call them awkward teenage years, I guess, that intermediate phase where you've got some things figured out, but you're still, I guess, making mistakes that you kick yourself over or you're frustrated with. Or the biggest thing, I think probably most common feeling in that intermediate phase is being very confused by moves in the market that you either haven't seen before, or not being able to gauge what is normal and what is not. A lot of the people that I talk with and work with, I've noticed that being sort of a pattern of frustration for that intermediate trader that has a system, has a way of approaching the market that they're very invested in terms of, strategy and really sticking to it, yet don't really know how to react when something happens that they don't quite understand. And they don't have the ability to, I guess, frame something as a normal move versus atypical. I think that, in my experience, is very common for that intermediate stage. So you tend to freak out and sort of react to something in a way that might not be worthy of the reaction, right? It might not be a statistical anomaly. It could be, something that's actually quite common with whatever product you're trading. So I think that's the biggest thing that I see a lot with that intermediate phase is, doing well, excited about markets, have a strategy, but still don't quite understand maybe the full dynamics yet, or what's within scope of normal and not normal, if that makes sense. Is that relatable to you or not?
Absolutely. The way I've had to, I am not by any means have enough screen time or experience to know much about anything, but I've combated that by only trading. I mean, I really only trade 2 tickers right now. And that has been such a massive change in my career because I started in penny stocks. So it was a different stock every single
Oh,
day,
yeah, yeah.
and then I went to options and I just felt like the world is my oyster. Like I can, whatever I want to do here, I can do all these different things with options. And that's a great way to blow up your account.
Absolutely.
Options are really difficult. So now I try to remove all of those variables and I try to do 2 weeks out and I only trade QQQ and IWM. And I try to stay at the money if at all possible, just to sort of make it so I know. And, I like to use, one position size. And then if I double it, it'll sort of be like the same, it'll be a second position kind of added to the first position kind of. But I
Gotcha.
try to take all my personal variables out of the market so that whatever the market does, at least it's not sort of like two things moving.
Makes sense. Are you still trading options on those products? Or are you trading the underlying SPY and Qs?
Options. I'm
Okay.
I'm sort of on my way out the options door, though. I mean, I'm not thrilled with trading options,
Penny, it will be the
honestly.
best decision you ever made. Just to be honest with you. I still, and this is one of the challenges that I see a lot of new folks struggle with is most of the free educational resources out there right now are geared towards options because they are insanely popular. We've been talking
Hmm.
for years that about this sort of options mania phase that the market is in that keeps getting more and more and more extreme in terms of, not only just size and volume of these things being traded, but exceeding that of the underlying being traded, and then also getting extreme in duration, getting shorter and shorter and shorter. So I understand why a lot of newer folks gravitate towards it, because you pull up YouTube and you want to learn how to trade, that's going to be a lot of the information that you're going to be flooded with, and learning sustainable, logical approaches to trading nowadays. It's not necessarily easy. It never really has been, to be honest, right? A lot of the information out there is either really outdated or it's geared towards these highly leveraged strategies. And let's be honest, options are very leveraged. And
Hmm.
I think I understand why a lot of people gravitate towards it, but I think you'll get, my personal prediction, I guess I'll make on your show, is you'll get out of that intermediate feeling phase once you start trading something else. I hate saying that, but options are one of the worst thing for a newer trader to get into, in my personal opinion, because you can be directionally correct and still lose money, or you can be directionally correct and not really be able to capitalize that full position to what you could have made trading something else because of natural time decay, or implied volatility crush if you're event trading. There's lots of reasons that make it extra difficult, right? There's more than two variables. It's not binary, like up or down. Is the market going up or down? That's the best way, I think, for a trader to really get their feet on the ground, is being able to understand the moves of a market and how it sways and what is normal, what's not normal. That's really hard to do when you're introducing additional variables like time, which you're introducing with options. So I have my own views on it. Obviously, we don't have to get into it, but I do feel like a lot of people give up on trading because they get too far into options, and it's a tough strategy. There's a reason why the big players love selling them to you.
I really appreciate that advice because I've started trading every day with PAX. And the way that I get from PAX's future levels to my levels on QQQ is the most convoluted, like trying to figure out how the levels match. It takes like so many extra steps in my brain versus like if I'm watching the NQ chart and then having to translate it to QQQ. It's a lot when I'm like,
It
well, I
is.
could just have traded this and know exactly what the levels are. But we'll
Correct.
see. We'll see what happens. But
Yeah.
I'm getting very tired of the options.
Totally understandable. I'm definitely a proponent. I mean, I'm a futures trader, but proponent of futures, or even safer would be non-leveraged, just trading the underlyings or stock trading. I still think at early phases for traders, risk management means more than anything, and that's just a lot more difficult to do with options. You're going to get, wider spreads and slippage and all kinds of stuff that are slowly going to make it more challenging for you. You're going to get that in the underlying as well. Don't get me wrong, but a lot of times, depending how people are trading, I notice a lot of newer traders do gravitate towards out of the money stuff where your spreads are going to be a little bit more challenging. I know you said you were sticking closer to the money, which is smarter. I still think you're probably just dealing with a variable that you might not need to at this point, which would be time and decay and things of that nature. But I digress. That's my own opinions on it. I think there's better ways for newer traders, or I shouldn't keep saying newer, intermediate, like where you're at, to probably be able to understand and navigate the markets.
I totally agree. And I appreciate you saying it. Honestly, it's refreshing sometimes to hear somebody say something really honest to you about your trading, especially because, like, there's so much about trading that I really like to keep close to the vest. There's so many people on Twitter and FinTwit who are out there saying their strategy and explaining what they're doing and talking about their trades and all of that. And that's not me. I don't want to teach. I don't want anyone to follow my trades. I don't really want anyone to follow my strategy. I'm just trying to, like,
Tunnel vision.
blinders.
Yeah.
Yeah.
No,
Yeah.
and that's a good thing, though. Honestly, I feel like even though I know that I'm in a position where naturally I do understand some people follow me in my trades and my strategy, and I think that's fine. I'm open about sharing all of that, but there is a lot of value in putting the blinders on, especially where you're at in the intermediate phase, because you really need to know not only your product inside out, but just how it moves. And sometimes blocking out all that noise and understanding what can I expect out of what I trade? What is an average daily move? What should I expect in terms of variability or volatility with this product? Putting your blinders on is a great way to really get engrossed in what you trade. So I'm all for it. I still do it, and it's harder now because we have a great community of other people you trade with and stuff. But sometimes the blinders are where it's at. You just got to step away and say, this is too much noise for me. I need to really get in and do some studying. So no, you're on the right track with that for sure. That's a great
Well,
idea.
thank you. So, the thing I really wanted to talk about today was bad habits. And it specifically came from a trade that I took on Friday where I had been waiting for a red trend day. Those are my favorite days. And on red trend days, I often oversize because it's like waiting for the perfect pitch, kind of like those are my favorite trades. Those are my best trades. Those are my biggest winning trades. And I just was sort of convinced that Friday was going to be a red trend day. And then, of course, it reversed, toward the end of the day and became, a hammer on the daily, I think is what it is. So anyway, that was a hard pill to swallow. And I was oversized. And I didn't put my stop where I usually do. And have spent the weekend just thinking, like, what are we going to do to ensure that doesn't happen again? And, I've written rules like 10 different times, and then you get in the moment and you're like, I just want to add more size, and it kind of overtakes the rules. So,
Yeah, absolutely. I mean, there's thinking about bad habits. I'm glad we're talking about trading. I was literally taking a sip of my cocktail when you said that, and I started to get worried. Like, where's Penny going with this? I have lots of bad habits. But in terms of trading bad habits, the three probably most common would be, in my personal opinion, again, this is just me, over trading, oversizing, and overconfidence. The three O's, I think, tend to kill most traders. It doesn't matter your experience level, to be honest with you. I think all of us fall prey to some of those at sometimes trading too much. I'm a huge advocate of minimizing trades. I consider myself a day trader, but there's days where I don't trade at all. In fact, there's been entire weeks where I haven't really done more than one or two things. So over trading, I think, kills a lot of people. That is I would say the number one bad habit is the innate desire that traders have to be in a position. They feel like if I'm not in a position, then I'm not actually day trading. And I think that's a huge pitfall, obviously. Oversizing, the second one, kind of gets to what you were just talking about, right? That's a very, very common thing as well. And it's not just the mistake of oversizing, because I do think sizing is its own enigma, and it is incredibly important for progression. You need to be able to hit high confidence trades with size, I firmly believe, in order to actually grow and be successful at doing this. Otherwise, you're just sort of flipping coins for your whole life and slowly, losing money to commission. So sizing is important, and oversizing is not inherently wrong. I think folks do it at maybe the wrong time, or they don't have maybe the data behind their trade to support sizing too large at that particular time. A really interesting one for you just to throw out there is, you're saying one of your favorite setups is that trend day down. And ironically, like, you apply some data to that and look back over 2022, for example. I did a data analysis for a lot of our customers over at Tradovate. And the funny thing is, the higher percentage play in terms of continuation really was still to the upside, even though we were in a bear market. So your trend days to the upside actually tended statistically to be more violent, probably because a lot of people were positioned short. So it helps to have data and context behind some of the sizing decisions as well, more than just I like it, more than those are my favorite days. That's not data. That's how Penny feels, right?
Sure.
Penny
Yes.
likes those trades, but it might not necessarily be statistically the best odds. The odds might not be on your side there, even though that you really enjoy it, that particular setup. So putting data behind it, I think, helps with the sizing so that you can really quantify setups that suit your style, that are repeatable, that have some sort of odds behind it in the past. I mean, that's folks that don't know me that might be listening. That's how I approach everything, is probabilities and numbers, because you're not going to be right every time in trading. Nobody is. That's just ridiculous and unrealistic. But you can apply some basic back testing to see, okay, how well do these specific setups perform over time, over years worth of data. I mean, that's why I do an analysis every year, because for my strategy, I want to see what has changed. Has something changed in these numbers that I need to worry about in terms of the probabilities that I rely on? I'm an opening range trader mostly. The 30-minute, different than Pax's 30-second that a lot of people are familiar with, but I know the numbers behind it. So I know that the odds for certain setups are on my side. And I would think about it no differently than if I was at a casino. There's certain bets that I would take over and over and over again if I knew that I had a 60-40 edge in that scenario. That is sustainable trading, but that doesn't mean that I'm going to oversize on every single one of those. There's other conditions that probably need to be met before I would consider really hitting something hard. So I would say on the second one, for oversizing, having some data behind it will help you make those decisions with a little bit more confidence and based on something more than just, I really like trend days down, because a lot of people do. And I really love trend days up, right? But that's not necessarily a reason for me to get super aggressive. It's another setup in the toolbox. And the third one, I don't get any sense that you struggle with it, but overconfidence, I think, is another thing that kills people. I am probably one of the most skittish, nervous, skeptical traders. Even though I have numbers behind a lot of stuff, I'm still very cautious every time. You should always be playing defense. I think once you've entered that position, that is your job now, right? You've entered it, you've put your money on the line. Defense matters more than offense. The offense part is done. You entered the trade, you already went on the offensive. Now it's all about defense. And sometimes I think people get killed really easily by getting on these hot streaks, and they just continue to press and press and press. And before you know it, you can hit a day that sort of wipes you out or wipes out a week's worth of gains. That to me was one of those early mistakes that I made over and over and over again, and finally said, this is ridiculous. I can't do this anymore. You can't just, approach it that way because my confidence is high. It's really amazing how quickly your confidence can change when you get absolutely wiped out. So those are the three that I will look out for the most, I guess, in terms of bad habits: over trading, oversizing, overconfidence. But if you're talking specifically intraday, I do have my own personal rules that I apply. I've shared these with folks before, but I don't know if do you want to get into it or not?
I'd
Because it
love
is
to hear them.
specific for how I trade. But obviously the first rule is don't move your stops. I mean, this should not even be said, to be honest, but it needs to be said because it is still a huge problem. People they believe they're right. So I'm just going to slide this stop down a little bit more. I'm going to slide it up a little bit more because you have this conviction. But the reality is the stop is there to tell you that you were wrong in the trade. Now, if you suck at stop placement, that's a whole separate issue, right? That people need to dive into. If I'm continuously getting stopped out, is my stop location appropriate given, let's say, the volatility in the market overall, the volatility for the day? There's different ways to judge that. Obviously, I use the opening range to do that, but your stop should be appropriate for the environment that you're in. But no matter what, don't move them. That's a huge no-no. Number two, I personally don't like to initiate inside value. I trade using volume profiles. The value range represents 70% of that volume that's been transacted for the session. So therefore, to me, all of that, those ticks in between that 70% range, it's essentially all the same. It's what the market, which is an auction, has deemed as fair value for the day. Therefore, me initiating a new position inside that range, I'm doing a disservice to myself because essentially I'm just basically flipping a coin at that point. If the market has already decided this is fair value for today, why would I start a new trade inside of there? Because I don't know which way it's going to break from there, lower or higher. You're flipping a coin. So I try, and obviously these rules get broken from time to time. I try my best not to initiate inside value once I feel like it's been firmly established. Number 3 on my list is do not revenge trade. I don't know. Have you ever done that?
Oh, yeah.
Yeah. I'm
like
being facetious because everybody has, right?
It's a huge hobby of mine.
I mean, it's a very realistic thing that everyone struggles with. Even if you're experienced, you have that feeling like, well, that was a fluke that I took a stop there, so I'm going to double up this next trade and make it back. That's an absolute death spiral that most traders will never recover from, because that's just not how it works. So revenge trading, I think, kills a lot of people. One that kind of gets to what you said earlier, I have on my list. I have like a little hand-drawn list that still stays on my desk. I shared it on Twitter before, but the 4th one is do not short trend days. But I guess that could be the opposite. So you love those red days down, don't long those. Sort of the same principle, right? If the market is trending and it's having a trend day, I have my own ways to gauge that through the thinness or thickness of the volume profile, plus acceleration of price from the open, plus extensions from the opening range. So whatever methods you use, fine. What's important is that you have a way of recognizing, is this a trend day? And don't fight it. If you miss the move, so your day's done. Wait for tomorrow, live to fight another day. And that's a very real reality that I still struggle with as well. I miss a lot of these setups, and you just have to sit out the rest of the day. If you try to get in late, you're just asking for trouble. So don't try to fade a trend day. That's a huge no. And then the last one, I won't say the swear words that I wrote down, but if you do catch a trend day, don't sell it. Don't paper hand it. All right. You got to be able to capitalize on those really good days when the market gives you a clear trend day like that. If you catch it, holding on is important, right? You need to have a real reason to get out of a trade if you're in it during a trend day, because what do trend days do? They usually keep trending, right? They keep pushing the limits of what most day traders think is reasonable or possible. I hear it all the time, and I read it in our Discord. People are like, oh, this can't possibly go any higher, or this can't possibly go any lower. Well, yeah, it can, and it probably will. So capitalizing on those days, whether you do it through full size or runners like I do, I don't think it matters as much. It just the point is you need to have you should have a thesis for every trade that you enter. You should also have a thesis for getting out. And a lot of times with trend days, I feel like people miss the bulk of the move because they didn't really have a good reason to get out other than excitement about their profits, right? That's the biggest thing. If you catch it and you see that position move in your favor right away and it takes off and you get excited, like I'm banking today, selling that because you're happy that you're making money is not a good thesis to get out of a trade on a trend day. So that's my personal opinion. I think people's accounts would grow a lot more if they were able to actually capitalize on those trend days instead of just getting excited and getting out and feeling like, oh, my work is done for the day. And I used to do the same thing. And sometimes I still do. But the reality is I used to be honestly a lot worse. I would make my money early and I would be pumped like my trading day's over, I'm out. But I've noticed like that's not really a good way to grow and maximize my skills, talent, strategies, whatever you want to call them. It's better to hold at least a portion of that and continue to make money, believe it or not, passively throughout the remainder of that session, even though I am not actively day trading anymore. Does that make sense?
Absolutely. My favorite trend day, I don't know if it was calls or puts, but I was in IWM and I left half the position on with a stop, like well above my entry. And every like 30 minutes, I'd open my account and just be like, like we're still going. But I couldn't look at, I had to just kind of be like, Jesus, take the wheel, because I didn't want to over trade that, and
Yeah. I'm a huge proponent of runners for that reason. I don't know if you're familiar with that concept or term.
for
Everyone
sure.
calls it something different, but my largest position size is always my initial entry. And then I peel off as I go. So if I catch a good breakout from the opening range high or low, I'm going to take the bulk of that trade off at that first extension because that's what my numbers support, and then hold a piece of that and move my stops to break even. And honestly, the best thing I've noticed for myself that I can do is to walk away, just like you said. Put your stop to where you're not going to lose money and don't look at it anymore, because you are more likely to screw up that trade on a trend day than the market is. And by that I mean stopping yourself out or getting excited or saying, "Oh, I think it might reverse."
Right.
You're more likely to mess it up than the market if you're truly trending. So put it in and walk away. I try to tell people that all the time. Literally go do something else. You have to think of the trade as over when your core position is off. And I think that's something that a lot of day traders struggle with, that it's not really over for them. They still want to watch every tick of the market. When I take that core of the trade off, say you're just use round numbers, say I'm long 10 contracts, I hit my target and I take 7 or 8 of them off and move my stops to break even for the last 2 or 3, the trade's done. It's over. I can't think about anything else. I made my money on that trade. The runners are a way to capitalize on additional moves there. And if it comes and stops it out, the trade's over. But the reality is some of those runners, especially in the markets that we've been trading for the past few years, they can run for days. And to me, I think to circle this all back to those bad habits, one of the biggest benefits to trading with the runner strategy, in my opinion, is that it will keep you from over trading. As a newer trader, intermediate trader, or even someone that's been doing it for a while, if you're in even a small position and it's netting you money, profit, it is keeping you from over trading and potentially losing money. So I'm always thinking about opportunity for error in my trading. How many opportunities for error am I exposing myself to? Every single new position is an opportunity for error. So I want to minimize that. So even if I'm not making as much, say I'm only holding on to a couple ES contracts and I'm letting that run for the next session or the next 2 sessions, I'd rather be making something than over trading and introducing the opportunity for new errors. So I think that helps minimize the biggest bad habit that I'm aware of, which is over trading, by holding a piece of something and collecting some additional profits on it. And
You
they
know,
don't always go your way, but that's just how you have to approach it. Sorry, go ahead.
I just had like a real aha moment. Um, so I really don't allow myself to hold options overnight because like you don't know. You just don't know,
Right.
right?
That's
And you
fair.
can't sell that option until the market opens the next day. What if like a war breaks out or like, so I always close out at the end of the day, and then you have to re-put your stop in when the market open if you held it overnight. I did not realize that on futures you could just put your stop in and just it stays. Like somehow
Yeah.
that didn't click in my head.
I mean, it depends on your platform. You might have to go put them back in when Globex opens. But yeah, the concept that you are still in the position, and that's another advantage personally for futures, is I can get out during the night. It depends on what options you're trading, though. I don't want to blanket it, right? There are options that trade different hours, but yes, that is, I think, a major advantage is you still do have access around the clock most of the time for these positions. But yeah, leaving a piece on, and I would think with the style that you described to me is probably still applicable because you're not trading, it sounds like super short dated. So you'll take a little bit of, hit on the theta there, but you have the opportunity to leave some runners, it sounds like. And
Hmm.
I think the other thing that it helps you do is like nobody actually gets objectively better at understanding their market and how to trade it um, when they are in a position, because you have a natural bias that you're always going to be seeing through that lens, right? If you are in a long position, you're naturally going to be looking at things a little bit different, whether we like to admit it or not. We're humans, right? So the advantage to runners is if you can truly get to a place where you think about that trade as dead, it's over. I made it and it's over. Then you can actually free up some brain capacity to study, to watch, to learn, to really see what is the market doing, how is it reacting to bonds tanking, or the dollar being aggressively bid, or all these other things. You can actually spend time studying, which in my opinion is where the real money is made. When people are in a full size position, that's a lot harder to do because you're struggling against your own bias. You're not really learning, you're just hoping that it goes your
Right.
way. Trading,
Yeah.
there's a huge element of luck involved in trading. I don't care what anyone says. People like to make themselves look like geniuses, but the reality is we all rely on a little bit of luck to be successful in this. And if you're sitting there in a full size position watching every tick of the market, you're actually not in a learning mode. So there's lots of advantages, I think, for trading the runner strategy to minimize over trading and free up brain capacity to actually learn some things about the market instead of just watching every tick and wondering, should I stop this out or not?
I love that. And so true. Before I let you go, we mentioned event contracts earlier in this episode. And since it is the Place Your Trades Network, I was wondering if you could just tell me quickly why you think it would be beneficial to take a position, a yes or no position with an event contract for someone like me who's been trading, 2 years.
Why it would be beneficial? Well, I think it kind of gets back to minimizing variables like we talked about earlier. It is binary, essentially up or down. So it is removing some of those variables that newer traders, I think, battle against and might not even realize. Time decay, things. I mean, yes, there's time decay involved in event contracts, not quite the same, but it's quite binary for given what the product is. I think if someone can't really feel out if the market is likely to, go up or down after the first 30 minutes of trading, then you would want to, minimizing as many variables as possible is probably a good idea, which would make something like an event contract a good way to do that. Obviously, the biggest thing that everyone knows already is that your loss is very well defined. And I think for people that are newer at trading or intermediate, you want to make sure you give yourself a lot of at bats. And the nice thing about the event contracts is I think they are relatively reasonably priced. I mean, obviously spreads in the overnight can be challenging, but during the regular trading hours, your risk is defined. You know what you're getting into. You want to give yourself a lot of at bats. You don't really have, well, I shouldn't say that. If you're trading reasonably, it's less likely that you're going to blow up trading event contracts. If you're placing all of your money on one bet, then you still have the same risk as anyone else. But if you're just learning to feel out the market, you have nice defined risk. It is directional in nature. And to me, I think that is an advantage for a newer trader to just try to simplify things and not make it complicated. Otherwise, you're going to be floundering around like your dog in the background there, wondering what the heck am I doing in the day. You want to make it as easy as possible when you're in that intermediate phase of trading, in my opinion.
I love that. And I totally agree. I've really enjoyed the event contracts for that as well. You just have to make the one decision, up or down. It's been great.
Minimize variables. That's what it's all about at this stage of the game. I think people make trading way more difficult than it needs to be, not just in their analysis, but in the products that they choose.
Of course, this has been lovely and a long time coming, and I learned so much. Thank you so much for sharing your expertise and also allowing me to tell you some things about my trading. And I appreciate the comments about it.
Thank you for having me. I'm excited and I'm excited for your journey. I have been watching. I've seen you're following along on Twitter, and seeing your progress, I think, is really exciting. I think that discovery phase is just the best. So don't get discouraged. Enjoy it because it really is the most fun part, I think, of anyone's trading journey is that ability to have new light bulb moments and discovering new things. So enjoy it. That is really what it's all about, and keep doing it. I think honestly we all have to keep growing and learning. I posted, to our folks, just as I'm learning new things all the time. The options market has changed a lot, so there's always something new to learn, and we shouldn't be afraid to say that, hey, I don't understand this, or help me understand it, or how do you see it? Because it's really all about continuous learning. If anyone wants to stay relevant in this game, if you don't keep learning in trading or Wall Street, you're as good as done. So I'm excited for you, and thank you so much for inviting me on. It's been a fun conversation, and looking forward to watching your progress.
Thank you so much. I hope you'll come back.
Will do. Thanks, Penny. Have a great
All
night.
right. Bye.